Hello and welcome back to another episode of the Market Outlook series. I am Kavita Agrawal, the founder of EXP Invest, and we are back to look at the market from an objective lens and assess the price action so we can tell what's coming up in the weeks ahead. So this is the weekly time frame of Nifty, as you can see on my chart, and one thing that stands out is this blue line, which happens to be the 250 EMA of the 1 day time frame. So Nifty has corrected enough to reach this line, which is hopefully going to act as support. Why would I say that? Because if you look at the past, this blue line has multiple times acted as support indeed for the index. Every time the index has approached it after a major correction, since the COVID, it has acted as an important support. During the COVID time, it was an anomaly, but other than that, if you see every time this 250 EMA gets approached, we get a pretty good support on the index. Coming down to the daily time frame, another important observation over here is that Nifty has corrected all the way to this bottom level. Why is this bottom of 21st November significant? Because this was the first low forged by the index after topping out on 27th of September. Now, typically, if you look at the past corrections, what we've seen is that every time the market goes in and breaches its previous low, within a matter of a week's activity, we see the starting of either a bull run or a sharp bounce back in the market, right? So every time a low gets breached, after that, the market stops declining and gives I would say, a throwback, a strong throwback. Why does this happen? Psychologically, when a new low gets breached, it pushes the market participants into pessimism. So a sharp selling comes off. When this sharp selling comes off, it exhausts the current, you can say the selling bucket. So because there are no more sellers left, the market has nowhere to go but up. So first of all, this itself is a pretty strong support level. If this does get breached, then within a week's time, I would expect a throwback in the market, a rally. Now, whether that will be the beginning of a new bull run or whether that will just be a temporary bounce back in a larger leg of correction, that is something that we need to wait for. However, based on my assessment of the RSI of the daily time frame, because the previous high was forged with very good momentum in the market, I expect that this leg of rally, should this level get breached and should we see further rally in this week, further correction in this week, I would expect that to be the end of the ABC wave as per late wave. And I would expect that the overall trend in the market is going to continue towards the upward direction. Moving one time frame lower, this is the 75-minute time frame. Now, what strikes me as the most important observation here is the development of this RSI positive divergence and the subsequent positive range shift in RSI. To help you observe this better, you can see that the previous low versus the current low, we formed a lower low on the price, but we formed a higher low on the RSI. So this is a formation of the RSI positive divergence. So this between this low and this low, there is a positive divergence. Between this low and this low, there is a positive divergence as well as a positive range shift. What do I mean by positive range shift? I mean that even though the price continues to decline and forge a new low, the RSI is taking support at the level of 40, which means it is trying to tell us that when the price is moving forward, it has more thrust than when the price is declining, which means basically the price has been going up in fewer candles by the same or more amount versus when it is coming down, it is taking more time to do that. So this underlying shift in thrust is actually a leading indicator of a turnaround in the prices in the market. So positive indication, but we still have to wait for confirmation. And like I said, if this low that was forged on around 21st of November, if this does get indeed breached, we would expect the market to correct as low as maybe 23,000, which would be this peak roughly. And it would also make sense because it is this peak where the real high was forged on the index. Why would I call this the real high? Because here, if you see, there's a negative divergence between this high and this high. So this was a real momentum peak that was forged. And usually these real peaks or these momentum peaks tend to act as very good support levels. So, in my opinion, the level of 23,000 should act as a strong support for the index should this level get breached. Now, let's move on to the assessment of our sectoral indices. We are starting off with Bank Nifty. And over here in Bank Nifty, I can see with the market going into another leg of correction, we've seen a massive downside continue. In the previous market outlook series, I was expecting the upside in Bank Nifty to continue, but it looks like it has broken below this low and continues to head downward. Now, this makes me slightly uncomfortable because this consolidation range has been breached. Also, the index has now officially forged a lower high as well as a lower low. So now it has gone into the correction mode. Also on the RSI daily time frame, you will see the RSI it has failed to surpass the level of 60, which again is an indication of weakness. And on the correction, it has breached below the support level of 40, which is showing us a negative range shift on the Bank Nifty. Coming to the auto sector, on the daily time frame, we've observed the RSI positive divergence, which is indicative of a potential upside. But this positive divergence needs a little bit more confirmation, price confirmation, by way of the index moving above the level of 24,000. Until that happens, it is better to exercise caution in the auto sector, but there is potential building up because the 250 EMA on the downside is also acting as support and the RSI on the daily time frame has started to show positive divergence. Coming to the commodity index, the commodity index over here is showing a positive divergence, but it is far from a confirmation right now. I would like to see the index move above at least one of the price peaks and then make further assessment. Until then, I will avoid this sector. Consumption sector. So the consumption sector is also showing RSI positive range shift by way of RSI respecting the level of 40. However, we still do need to see confirmation here as well by way of the index moving above the level of 11,700 and sustaining itself. Until that happens, please exercise caution if you do happen to make new positions. Now, the CNX energy, I think it's giving a lot of mixed signals. The last time it gave a massive correction, there was a breach on the level of 30, which, even with a positive divergence, does indicate more correction is due. And we can see the correction in energy sector continues to unfold with a lot of thrust. So, for now, I think it's better to stay away from the energy sector until the price action confirms a reversal. Now, the CNX finance sector had a strong trendline support here, which it has breached, and it also breached its previous low. And in doing so, it has been forming lower highs as well as now lower lows, indicating that the finance sector is now in correction. Also, if you look at the RSI, again, we see that the RSI failed to surpass the level of 60 on the daily time frame and has breached below the level of 40. So more downside can actually be expected in the finance and the banking sectors. The FMCG sector has been showing positive movement. And also we saw some strong positive move come in on individual stocks like Hindustan Unilever, Coal, Pearl, Dabur, and I expect that upside to actually continue in the FMCG sector. It looks like the FMCG sector has formed a bottom here. So as long as it doesn't breach below the level of 55,500, I would expect more upside to come. I'd be more comfortable with the sector once this resistance of 58,300 does get breached. On the daily time frame RSI, we are seeing there is a positive divergence and a positive range shift, adding to our conviction that the FMCG sector might be set to head higher. Talking about the CNX infra, now this infra sector, it breached the 250 EMA last time before taking a small bounce back. However, this time it seems to have breached the 250 EMA support with a little bit more conviction. We did see a positive range shift, temporary positive range shift. However, the RSI seems to be coming back below the level of 40 here. So the infra sector has tried to sustain itself and rally, but it doesn't seem to be very successful in doing that. So exercise caution in taking any massive trades in the infra sector for now. The IT sector. So in the IT sector, I can see that there was RSI negative divergence here. However, since the RSI negative divergence that we saw here was within the same wave of upside, this RSI negative divergence was within the same wave of upside. It indicated more towards a correction of this wave rather than the larger rally. So we did see a correction over here and then more upside. However, now if you see there is a negative divergence between the peak of two separate waves. However, this wave, whether it is complete or not, cannot be said. But since the price is anyway still higher, the price is definitely higher at this point than this point. I would have ideally liked to see the momentum display stronger on this rally, which hasn't happened. That being said, if we move to the 75-minute time frame, what we can hear is that while forming almost a similar low, the RSI here has forged a positive divergence. So I would say this is where the index has formed a temporary, at least a temporary low and is headed higher. It has broken above this resistance zone and at least on the 75-minute time frame is now forming higher lows as well as higher high formation. So more rally can be expected in the IT sector. The media sector looks quite weak and should be avoided. The metal sector also looks quite weak and should be avoided. It is in a downward trending channel. A little bit of bounce back may come here, but until we have more confirmation on this sector, it is better to steer clear of the metal sector for the time being. So the pharma sector, as I'd observed in the last week's market outlook, has taken strong support on the trend line and it has come back down to retest this trend line. As long as it continues to sustain above the trend line, I think the pharma sector can see more upside. However, if it happens to breach, if the sector index happens to breach below the level of 22,200, then we might see more correction, at least to the 250 EMA level. The PSE sector has been in quite a correction, and I expect this correction to continue. The PSU banking sector, just like the finance sector and the bank Nifty or the private banking sector, continues to look quite weak. It did forge a higher high, but it looks like it was more of a coil formation or a broadening triangle formation. And if you want to see the broadening triangle, you can see it right here like this. This broadening triangle seems, so this is a bearish formation on the charts, and we can see that the RSI did rally up to the level of 60, but then it lost momentum and it continued to head downward. The reality sector. What about the reality sector? Let's zoom out a little bit and we can see that the momentum peaked out and we went into correction, but there are still bouts of positive movement. So with the reality sector, I think swing trading is a good idea. Reality stocks are, they respond very well to swing trading activity. So I would wait for the index to move above this resistance level of around 1,000. Once it does, then I think we can find good picks in this sector. Talking about the service sector, there was resistance at the level of 60 on RSI, which indicated that this point onwards, at least the rally might not continue. And now we are seeing the sector retest the level of 40. So in the next week's market outlook, we'll have better visibility on what the service sector index is trying to tell us. Consumer durables. Now, on the consumer durables, even though the price has forged a slight higher high here, I can see that the RSI has forged a negative divergence. So here I would expect a little bit more correction to continue before it becomes safe to purchase the index again. So like I observed in the broader Nifty index, it looks like this week we might see more negative activity because we are retesting a low and If it does get breached, then this beyond this week, next week is when a throwback should be witnessed in the market. So continue to stay patient and continue to exercise strict risk management on your positions. Remember, when the bear market comes, it will lead to decline in the portfolio. It's rule of the market. But if you're disciplined, if you manage your risk properly, when the bear market ends, you will have capital to reinvest on the upside in the market. Holding on to losers, however, will not help you make money when the bull market comes because of the concept of sector rotation. Every rally does not see participation from the same sectors. So, if you continue to hold on to losers in the hope of seeing recovery, there is a good chance that you are going to incur not just actual or absolute loss, but also opportunity cost when the market goes back into. All right, with that, we come to the end of today's Market Outlook series. Thank you for watching. If you found this session useful, do leave a comment. If you wish to connect with me, the best way to do that would be to join my Telegram channel, Trade with Kavit. In order to join my Telegram channel and get more information about how I can help you swing trade, answer these questions, learn from me, or trade with me, all you need to do is go on Telegram and search for Trade with Kavita. Now, I would like to warn you that there are some fake channels running with my name. What you need to do is make sure that you're joining with the correct link. I will be dropping the link to my Telegram channel in the comments, and you'll also find it in the description of this video. So make sure that you join the correct channel. With that, I will sign off. Thank you so much for watching this video. I will see you in the next week's market outlook. Until then, happy trading.